Okay, good morning, everybody. Am I live now? Shows that I am live right now. Oh boy, I just want to make sure that I. Okay, nice. All right, everyone. So welcome back to another live stream, and I just want to welcome you. Hope you had a fantastic weekend. Hope you were able to enjoy it. Had some good time with family and friends, or a good time with yourself, as well as maybe put some couple of a bit of time to study, look into the charts, self-reflect, reread your journals. It's a good time to it's a good time to do that. Anyways, I'll be continuing my live streams, and I'll be observing price as it prints. I've been using the what we call it, the CFDs rather than futures, because that's what TradingView gives us for free. Yep. So I'm gonna be looking at the charts here. We have, as mentioned last week, we are in this big phantom leg. It's being depicted from the high here that was made on Thursday to now Monday. And all the lows that we've been running, they've all been broken through or referred to already by another instrument. So there hasn't been no S&T that I've been waiting for to create that B leg so that we can anchor ourselves from to be able to take price up to high prices. Now, now that it's building up this premium, I'm interested in seeing old highs that were created from this leg high to low and see if we can get an S&T off the highs. Once we do that, um, hopefully we'll be able to anchor ourselves from our A to B leg, see if we can trade to 25% and take things down lower. What is interesting, however, is the fact that the dollar has been rallying up in price due to the fact that interest rates have been dropping, and interest rates have been dropping because bonds have had a sudden change of heart and just continue to go up further, higher. Okay. And yeah, I'm currently looking at the bonds right now. They're going exceedingly bullish, which was expected because, as I've mentioned a while back, we had S&T on the lows here, low, higher, low, right? So we had a cracking correlation on the low side. So that usually means that the 10-year bonds were, I guess, relatively strength compared to, I believe it was a 30. Yeah, 30. See, lower low. So that has been going up. So since this is going up, what do you think is causing interest rates to do? Drop, exactly. So we're looking for this to drop, anticipating maybe looking it up to this external range liquidity or this external range liquidity. But while it's dropping, it's also causing the dollar to drop as well. So I've been looking at this morning before I started the live stream, and I was just trying to see how I can get my foot ready for the week, and how this will be in a way guiding us to see how we will be creating the week candle for this week. So if the dollar keeps dropping like that, stocks are going to be going up higher. Um, yeah, so it's going to be going up higher. It will have least resistance going up. Not that it can still meet up a high here, which is what we're anticipating. We're anticipating to refer back to these old highs. Okay, as it's creating this new phantom leg of a phantom leg. During this time, of which we can refer back to these old lows. So we have the pre-market sell-side liquidity and Sunday's Asia sell-side liquidity. And then we also have Friday's sell-side liquidity session from our PM. So we have a couple of SMTs down here at the bottom. Excuse me. Since we have already referred back to these highs, right? And if we still want to go higher, there's nothing else left besides London's Friday's London's buy-side liquidity pool that has been left over. I should probably update you. This is going to be not Mondays, but rather Sunday's opening. Okay. Notice we also have a liquidity, a dealing range from this high to this low. Since it's separated, we're anticipating maybe going up to get to turtle soup high here, only to then sell it down to go down further. But it's literally the first of the week, so I'm not really anticipating as much. Once again, this is the stock market in August. Tend to see a lot of consolidation. I almost forgot into looking at today's news. So very low news, not that much news actually. Are we gonna get anything? So we have Thursday. And we have unemployment claims on Thursday, but nothing too crazy like FOMC or non-farm payroll or CPI or PPI, I believe. Nothing like that. So it is going to be one of those dry days in terms of news. Okay. So as it has been rallying up here, what has been balanced? Now we're going to be looking at this at a much more closer perspective. Now that we have this going. Okay. Get rid of that. And oh yes, we have to connect our demo trading here. So once again, since it's 9 o'clock, I'm going to be referring back to 7. Okay, they got one of the most common trading formations right here. Refer back until 10. Okay. We're also about to have the stock market open up too, so we have a bearish breaker block. We've also tapped outside of this external range liquidity, so we could be using this old high here as support after we had traded from it above at 904. So we'll see if this will continue the uptrend, because again, there has been no SMT here on the highs. Everything has been referred back to Yeah, this was already referred back to this. So if it's gonna go up higher, I mean Fridays, London buy side liquidity. It's next. Okay, and then lastly we have our 925. Okay. Another bearish breaker. Anticipating this being treated as a inverse array until 9:30. So we'll see if that after 9:15, price expanded up higher, closed above it higher. Okay, past this rejection block, old high, retrace back down, headed down towards volume imbalance over here. But also there's a inverse bearish breaker that price used here as support slightly. Now it expanded up a little bit higher. We're looking to see if that was all that was needed to expand up to higher prices. In the meantime, I'll be referring to this entry here. Buying 3 lots, setting my stop loss down to here. And seeing if that will continue the expandment going up higher. Okay, how high? Up to London's buy side liquidity pool. And we have until 9:30 for this to wait, what? That should have been triggered. Maybe if I refresh the page, maybe it will be triggered by then. CFDs, no? What in the world? That's weird, dude. So I left the limit order, unless it was being modified, like when I was moving this up. Let's say cancel your order. No, I should just continue going. That's weird. All right, so we have an entry that we thought was gonna get in, but it didn't. Huh, look at that. What candle was that? 8:55. 44, 41, 53, 54, 55. Why would it do something like that? So we got a minute until stock market opens up here. Man, it didn't register. That's odd. We got 20 seconds until the open. We're looking for a rally above London. Or that's so strange. Why didn't it trigger me? I'm still kind of mad about that. We had a 75%. Stop loss was at the low here. So it would have been like 7 handles. And see if that would have been taking you up. It's 9:30 now, so would that have been taking you up, up? Alright, so this trade would have been dealt with, meaning that it would have been already break even the moment the stock market opened up. And now we're looking to see if this trend will continue. So we have a higher low. Oops. So some would call this a type 2 dealing range. Okay, meaning from this low to this high, it's a type 2 dealing range, so we could see anticipating a reversal. We don't want to see that happen, however, because we're under bias that we want to go up higher. Then there is this new one here. Oh, another one. Oh, it's like 2 dealing ranges stacked together. That's crazy. Let's see what happens if we get into a market order at 1. Yes, put me in there, chief. Okay, I'd like to see that. I'd love to see something like that, no? Reaching up to these highs. The London buy-side liquidity. Let's expand our view a little higher, maybe 5 minutes. Let's see if it'll continue going up in that direction. What kind of music is this? Caught a little bit off guard here. All right, so I'm gonna be setting my. Has it been? Yeah, it's been like a couple of minutes past the. Yes. So again, I'm looking for 9:45 to see where we're standing. But if we've passed already half of this time, so 30 plus 7, it's like 37. So seeing that we're so overextended up there, I'm gonna go ahead and push my stop loss to break even. Seeing that that will continue us to keep going up. Maybe the trading view broker saw this move coming and did not want to fill me in. That was crazy. Why did he want to fill me in back here? I'm still kind of a little perplexed about that. Excuse me. So it's 8:45 now, right? What's the nearest form of liquidity that I could refer back to? This one. Oops. Modify order right down below here. Okay, let's see if we can let this guy run. We also have, let's see here. Yeah. No coffee required. Just just get so freaking energized from this stuff. It's weird, no? Now, because it's only one contract, look at this, we've already reached 25% back up here. I'm curious, because this is, where is this 50 coming from? It's definitely coming from, oops, wrong chart. Clicking the wrong chart. Go back into the daily. This white chart's coming from this low to this high, okay? Across the medium, the equilibrium level again. So we're at fair value. Like, in my experience, these low news days tend to be the days where they're like, there's nothing in the way of getting in, like in the markets. Like, as if it's there's little manipulation. It's little. It just goes towards wherever it needs to go. Like, if there's unfinished business somewhere, it's just gonna go there. And right now, the unfinished business is those old highs, which is where I suspect the thing where we will be going. But again, anything can happen. Oh, okay. Let's refer back to these old highs up here. Has anyone here referred back to it? Well, I know that the one that we're analyzing hasn't. Have you referred back to it? No, you haven't. Have you referred back to it? No, you haven't. So, still a place I'm really interested in seeing. Uh, US 100, US 500, US 30, heading up towards. While we're watching, let's go ahead and mark out our first percentage fair value gap because it's already been 950. So, there you are. Just look at this mess. I gotta clean it up. 930. $9.10. But in here, this like we'll be able to find our first fair value gap right here. How is this not even referred back to? Wow. I'm interested in seeing how we're using these equilibrium levels. Look at that. Equilibrium from this white range, and look, we had little reaccumulation here. And now I'm curious how we're going to be using this quadrant level here. Are we going to use it as support to continue up our move? So something like this. I'm curious how we're going to be using this level. In the meantime, I think it's safe now to raise up my stop loss again. I'm only managing one contract, so I want to be, and we have. It looks like we're gonna have a little bit of a runner, so I want to really take this a little slow in terms of protecting my money or the money in this account. Notice that wick on the 25% quadrant. It's busy with the volume imbalance. This has already been balanced on the way up, so let's see how it will react between this high to this low right here. That will be a busy, and it's aligned with the 25% quadrant level, so we'll see if that will take us up higher. That will be the cause. I think I'm interested in seeing too is that if this was the daily range, right? Okay, low. Do we have a divergence here? I'm trying to find on the lows. Oops, where'd he go? Low. Yeah, it looked like a low, lower low. Yeah, okay. Right, the busy volume imbalance, quarter level. Look how it's just wicking in there. Will this continue to move up higher? That high was formed on Friday at midnight. No, hang on, I'm not seeing this right. Yeah, like around 1 o'clock, 1 a.m. Really? It's so annoying. Still got ways to go. I think it's safe to move it just up a little bit. A little bit more. If this was a multiple contract position, as soon as I had made this retracement here, it traded back up again, I'm taking a partial there. Very weird day for a day with no news, right? And the reason I got here was because, well, I saw, I think, yeah, I saw a busy in there, in another chart, and I thought because we were so bullish, and because we really wanted to head up there to reach for unfinished business, I took that as a discount array to go up higher. That was kind of like the entry down here, but yeah. And then I'm still upset about not being filled here by that limit order. It should have been triggered. It dipped down there. Let's see, what did we do during the 950 macro? We ran towards an inefficiency. This was the inefficiency to refer back. That was perfectly aligned with the 1/4%. Okay. So I'm gonna raise the stop loss up to this. Let's see if that will continue to move up higher. Or if we take the event horizon, so we'll take an old high. Which high was the one? Yeah, we can refer back to the old London lunch highs. Here. And then there, that 25% levels of the event horizon. So pretty much this order block right here. What is this, bro? Oh my goodness. So it's 10 o'clock now. We're definitely going to have a new formation now. Let's take a look at this one. Okay, so that's a new formation. Okay, so that's you. This. And lastly, we'll do this. I wonder from this quadrant to this quadrant, there is a 50% level, so you can anticipate something like this happening. Sorry about that. Okay, so we're at 70%, 70%. We're at 50% of the open float time extension from 10 a.m. to 10:15. So how will you manage your stop loss? Will you increase a little further up? I think I would. Not to this low. Um, Sorry about that. Maybe not to this low right here, because we're moving up in quadrants. So I was quite experimenting there. I was looking to see if trading you treat it as like two separate trades, having the first one and the second one tied together like that. It looks like it just once you submit a new trade, looks like it just combines the two positions and then move your stop loss to the most current stop loss of your second trade. So I really thought I was gonna respect both positions and their stop losses, but it looks like it just combined both of them. I wonder if there's a way you can like change that. But we're still looking for these prices to be met up here. So even though I'm out of this demo trade, I'm still interested in seeing what happens next year. So here's the thing, right? We haven't met a qualified low in the form of S&T, right? There was no cracking correlation. So what should we call it? In a way, we're not in a confirmed buy program. This is still a phantom leg from this high to this low. And now that we've been retracing back up here again, this low to this side has also been a phantom leg of a phantom leg. So in a way, as much as I would prefer to go up to these London buy side liquidity, the fact that we've been spending time around these areas here is also valid because we're still not in a confirmed buy program, right? Price would have had to have reacted out in a certain low and given us that SMT, but it hasn't. It hasn't yet. So even though yes, this is what we want to see, short-term bullish, the fact that we'd be spending some time over here and now considering even possibly going back down to these lows, that's still fine. I'm already out of this position, but we would still would like to. I still would like to see this get tapped. If not, the balanced price ranges are giving you hints of how price would be, perhaps changing its behavior. So if it was a confirmed buy, I would have been trusting every single buy signal created by my balanced price theory. So everything that showed me as reasons to get me up higher, I will go ahead and get into that. Because right now we're in the possibility of getting either high or up lower. Um, you kind of have to juggle between both. So since we were risk managers first and preservers of money, um, this whole trade up would have already been stopped out up to when it once it had reached up to 1/4% level again. So I would have been out of the position. The point is that today would have been a profitable day, despite it not reaching our goal. Doesn't mean that we have to be right. You have to be. You don't have to be right in this market. Your job is to make money, and since we managed accordingly, this low here was our protected low for the stop loss. So even though it didn't trigger, even though it was triggered, we don't count this as a loss. I would go back in there in the future and make myself feel ashamed for not calling the actual high. But as I've learned, you don't have to be right to make money. Your job is to make money, so don't even worry about being right. Your point is just grab a tiger by the tail, and once it starts sprinting, you manage it. You move it slow. You move your stop loss slowly, and once it comes into a halt and does something like this, and it stops you out, that's okay. You still capture the move from this low to this high. I wouldn't be upset about that anymore. So if you're unsatisfied that it didn't reach the profit objective, then yeah. But we'll see if we'll still get up there anyways. We're in an environment where it can go either or. This morning we saw how the structure that was in place. We saw the possibility of reaching up to these heights, so we'll take it. Of course, with time dictating new interest. Now we have a new interest here low. We could even anticipate reaching it back down to these lows again. So I'm gonna leave it to it. It's my curve view, so I hope you